The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, joining us now to discuss the crypto markets is Amber Group co-founder and CEO Michael Wu in Hong Kong. Welcome to the show, Michael. What is your critique on what is happening with the markets, how China may be giving a little fear, uncertainty, and doubt into the markets, and now we're seeing a lot of selling pressure?
Thank you, Christine. Great to be here. Thanks for having me on the CoinDesk TV. I like you said, I think we are in an interesting market period, right? But it's clearly not the first time for crypto, and it won't be the last time. It is still a very young asset class. It still has quite a bit of volatility to it. It has its cycles. We experienced a very rapid cycle of adoption, right, with institutions leading the charge, and then global adoption happening in the latest cycle, probably starting from around a bit earlier in 2020 last year, right? Now we are seeing a wave of correction, but at the same time this is not new, right? I mean every time you see a lot of the same patterns, right? You see market overreacted, overheated, right? People get on a bit of too much leverage than they probably should have. A bit of a external shock coming from regulation fronts, and we will get to a similar situation, right? Like probably like last time in 2018 or early 2020, right? But Bitcoin and the crypto broadly come out stronger out of every cycle, and I think it will continue to be this way. And not to mention, I think the fundamental for not just crypto as an asset class, but also crypto finance as an industry is a lot stronger. The fundamentals a lot more solid this time. So, if you are really serious and long-term about crypto, about the industry, you probably are not too concerned. You just need to manage your risk, manage your position. Probably don't take on leverages that you probably aren't comfortable with, and stick to it over the long term.
Michael, you do a lot of business in Asia, and so it's great to have you on the show right now. Could you just break down for the average viewer what exactly is going on in China? Because, as you said, it's not necessarily new, but I think it's very confusing to a lot of people. What is different this time? China recently, they've have new guidelines on both mining and on institutions touching crypto. Is this basically the same exact thing as before, or is there something actually different about what they're saying?
I think you pointed out, exactly the key point there, is this time, there's quite a bit of focus on mining. I think, last time in, 2017 or 2018, right, when the Chinese regulators became quite defensive or cautious against crypto, mining wasn't at least, the center of the focus back then. But this time it's quite different. A lot of the mining, I think, almost all, at least, the major mining operations were shut down this time in mainland China.
Why do you think China is cracking down on mining now? I mean, I know some people say that it's environmental concerns. Other people say that it has absolutely nothing to do with the environment. I'm curious, what is your take? Why is China targeting mining right now?
I think, an environmental concern is, in my opinion, is definitely a real factor into this, and probably, one of the major factors, right? And, China, as well as, many major countries are, pretty serious about going more carbon neutral, right? And it is, not only, it is a good move for the world, right? Anyways, but, there's also quite a bit of political, I guess, political competition in there, and, quite a lot of, I guess, big geopolitical factors into this, right? And, to the Chinese government, right, they probably, don't like crypto mining as an industry too much anyway, right? And, in their understanding, it also, goes against this, more strategic carbon neutral initiatives they're taking. So, 1 + 1, you're probably getting, it's probably not good news for Chinese miners.
Michael,
although if they were really concerned about the environment, sorry, just real quick, if they're really concerned about the environment, why wouldn't they just say, okay, you have to focus on renewables rather than crack down on mining entirely?
I think, like I said, it's not, I think it's one of the factors, right? And also, crypto is not currently a very, I guess, the best way to put this is it's at least not a favored industry, right? And crypto mining, as a result, right, can be a bit sensitive to many things, to the FX control, right, to the AML, KYC fronts, because I think the regulators in China are smart enough to understand, right, by investing in mining, even on the surface it appears as if you are investing in machines or almost factory-like operations, right? But essentially, you are investing in a financial asset, right? And therefore, it gets tricky in a capital control country, and it gets tricky with a lot of things like how to regulate the fund flows and yeah.
Michael, one of the big narratives since this past year, since the pandemic began, was that with the increase in monetary supply and fiscal spending, that Bitcoin would provide a hedge against all that. And so we saw Bitcoin go from around 10,000 back in October, or 13,000 back in October, all the way to 60,000, and it subsequently pulled back. Has that scared off the institutions, and are the institutions that are you aware of, are they reconsidering, at least for the time being, where they should get into Bitcoin, or should they get into Bitcoin at this moment as an inflation hedge? Has that narrative worn out?
I think, actually recent market reactions and, if anything, proves these narratives, right? Proves the logic, Bitcoin, traded, I think more than just a anti-inflation asset, but, it did trade it on the back of, the global easing, right? And recently, with the Fed turning quite a bit more hawkish, or at least, more so in the short term than many have expected, Bitcoin as well as other deflationary assets took a hit as a result, right? I mean, it's probably not the only factor, but the correlation actually proves this narrative rather than it disproves it. At the same time, on the second part of your question about institutional stance towards crypto, right? From what we see, and we do service a lot of the largest institutions, both crypto native and more on the traditional side. I think we see no slowdown in institutional interest in crypto as an asset. If anything, this probably provides them a better opportunity to assess the asset class.
Well, speaking of which, Michael, your firm provides algorithmic trading as well as high frequency and over-the-counter trading for various institutional clients. You just recently raised $100 million on a Series B round led by China Renaissance with a valuation of about $1 billion. So what are you going to do with this money?
Oh, thank you. Thank you for this. This is actually a very interesting question to me. I kind of have to ask myself too, because we don't really need the capital, to be very frank. As a startup, Amber is very fortunate to be profitable quite early on. I mean, especially over the past 3 or 4 quarters, the company actually has a pretty strong cash flow. So, it's more about really, this fundraising, or even our Series A fundraising back in 2019 was really about bringing, the right institutional partners that help the company grow, right? We've gone from 0 to 1. I think now we have to go from 1 to 100. And, who are the firms, who are the people who can help us do that, right? And one thing though, I mean, no one's complaining about having more capital or more money, right? So I guess, it will, in fact, help us, be a bit more aggressive, which I think we already are in terms of bringing the best talents globally, and to really market globally, to expand globally, to set up the right infrastructure in terms of compliance, in terms of operations, in terms of branding, and really bring Amber's brand, bring Amber's services and products to our global customers.